but I think that it's absolutely clear that high-frequency trading is an activity that is against the interests of investors. The stock market situation in the U.S. is, I think, a terrible mess. If you could turn the clock back and have the stock exchanges the way that they were 30 or 40 years ago, we would be much, much better off.
Much better than now.
Much better off. There are all these crazy order types. I mean, what orders do you need to manage a portfolio? Buy, sell, buy with a limit, sell with a limit, right? But they've got crazy order types that are out there just so the high-frequency traders can gather information that they can use to exploit the real investors when they're trying to implement their portfolio strategies. So I worry that you can't get the genie back in the bottle, but I'm thinking about like writing an op-ed piece outlining my ideas about how it is that we should restructure the markets, go back to the more or less to the way they were 30 or 40 years ago, at least in terms of centralization. I think that obviously you'd have more computerization today, but yeah, simple. I think making it simple is the solution to an enormous number of our problems. When you look at the causes of the financial crisis, the complexity of our financial institutions made a huge contribution to that. And the things that really matter, gathering of deposits, making of loans, those are pretty simple activities. But a lot of what got us into trouble came from the complexity that players have added to the markets, and the complexity doesn't benefit the long-term investor. The complexity benefits the financial institutions, and it's bad for society.
For sure.